There are four major headlines associated with the tax reform that went into place at the end of 2017. Those major headlines are, number one, probably the single biggest one, lower tax rates. And generally that's good for virtually all companies. We're going to get into the specific tax rates in just a second, but just directionally understand that lower tax rates, good for everybody. The next headline was something called bonus depreciation. Basically, companies for tax purposes are generally able to depreciate a lot more than they used to pre-tax reform. And that's good. For tax purposes, more depreciation is good. It lowers your tax bill. Again, we're going to talk about this throughout. It doesn't really affect your GAAP taxes, which are usually your GAAP depreciation, which is a function of straight line depreciation. But for tax purposes, major tax reductions, especially for capital intensive companies, as well as acquirers. And we'll talk about that in part 2 of this webinar. The next major headline is a limit on interest deduction. So we've taken for granted that if a company is levered, they've got interest expense, they can deduct that interest expense to reduce their tax bill. As a way to sort of counteract the deficit creating impacts of lower tax rates and bonus depreciation, the government also had to put some limits on some benefits, some deduction benefits that they had prior to this had. And the limit on interest deduction is probably the most headline grabbing and significant reduction. In other words, companies with a lot of debt and therefore a lot of interest expense cannot deduct all of it. It is subject to a test that we're going to get into shortly. This is, again, bad for levered companies and by association, the returns that private equity investors can extract from highly levered businesses that they own as part of their portfolio companies. Lastly, the NOL limits, or I should say net operating losses, have been reduced. The benefits of NOLs have been reduced. There are now specifically been limits imposed on the ability to use NOLs against future income. So again, this is bad for companies with losses and acquirers of companies with losses. And we're going to talk about both of those scenarios in detail. But those are the headlines. And so as we go through this, really the session is just about understanding how those four things and a few other issues here and there really affect what's going on in your financial model. So let's talk about the tax rates. Pre-TCJA, which is the name of the Tax Reform Act, C corporations had faced a 35% tax rate. If you factored in their double tax on dividends and capital gains, you're looking at a tax rate of 50.5%. Partnerships, S corporations, LLCs, what we generally consider pass-through entities, had faced just one level of tax of 39.6%. So again, it was better to be a partnership or an LLC. Obviously, the tax rates are lower. Post-TCJA, the difference still exists, but the gap is narrowed. So C corporations have gone down to 21%. But if you factor in the double tax, as well as Medicare, as well as there's like a 3.8% tax built into here in addition to the double tax. There's a Medicare tax as well that flows through both of these. It gets you to 39.8% post-TCJA, right? So we're talking about a 10% sort of in aggregate reduction, whereas for partnerships, it's gone down by about 6%. So used to be 50.5 versus 39.6. Now it's essentially 40 compared to 33.4. Still marginally better to be a pass-through entity, although notice, and this will come into play next week, the gap has narrowed. There's been no change to state and local taxes, dividend or net investment tax rates at all. A couple of things to keep in mind. The corporate tax rate change is permanent. The goal of it was to get U.S. tax rates competitive with the rest of the world, whereas the partnership, pass-through rates are changing to 33.4%, which expires January 1st, 2026. As we mentioned, that it's going to rise back to 40.8% thereafter, sort of generally in line with what the current rates are.